So the entire market cryptocurrency basically is going down. What's up, YouTube community? Welcome to InvestDesk, your number one channel for cryptocurrency investing, research, daily news, updates, and forecasts. My name is Syed, and in this short video, I'm going to talk about why the crypto market is on its whole, whether it's Bitcoin, whether it's Ethereum, whether it's Cardano, whether it's Dogecoin, whether it's SafeMoon, every single crypto is down. And here is the main reason, the top reason that I think is going down is because of course, as I call it, the Joe Biden effect. And the reason why is because the government is trying to tax down some of these crypto gains. Well, we already have a capital gains tax within the United States, for example, and of course other countries have their own laws, rules, and regulations. But I'm going to play this, of course, some of the analysts that talk about why Bitcoin is dropping, why the entire crypto market is going down. And then, of course, I'll give you the top reason that I also feel, like I said earlier, is the Biden effect. But we'll first take a look at the entire market. So, hey, no need to panic. We'll just take a look at it, see what they say.
You can tell me to go away, and I'm looking for a narrative that does not exist, but SPACs suffering, cryptocurrency, crypto assets now over the last week suffering as well. Retail volume, call options, all of that put together. Jared, what's going on here?
Yeah, John. Hey, look, I don't want to talk about Dogecoin either, but you know, I think the big story tied all together is that there's been a huge rise in these big market unknowns, is what we call them. Whether it's retail frenzy or the SPAC frenzy or the crypto frenzy, people have got some money. They could put it to work in the real economy. They could buy things. Right now, they're buying financial things, unusual financial things. And I think this is coming, if not totally to a top, near to a top. I mean, you've seen the top in SPACs. You've seen, at something like a 20 to 30% drawdown in, one index of the largest SPACs. That's why we've been so cautious on it in the last few months. Is the equity issuance in some crypto-related companies going to be the top in the Bitcoin market? I'm not sure, but I think there's reasons to be cautious there too.
Jared, earlier on in the program, Victoria Fernandez across Mark brought up the savings rate in America as a data point to be bullish. To be bullish because it'll get pared down and that money will get spent. I just noticed from you, Jared, you're pushing back just a little bit. Why is that?
I mean, there's a few reasons. I think the big conclusion from us with regards to this excess cash, and it is a lot of excess cash on household balance sheets. But I mean, there's two things to think about. And the first one, I just want to keep it simple. There's one number that I think everyone needs to know, which is 10%. That's the share of stimulus, according to our economists, and looking at, almost real-time Bank of America card data, showing what consumers around the United States are doing with their stimulus checks. And the third round of stimulus has actually had the lowest spending response so far. Just 10% of those funds, have been likely to be consumed. So what people are doing with the rest, whether they're saving it in cash or paying down their debts, catching up on their rent, building up their own balance sheets against future risk, or buying financial assets, they're certainly not going out and spending in the real economy in the way that the inflation uber bulls had thought that they would. So I think that those fears about runaway inflation and all the hedges you need to put on are totally misplaced as far as the data so far. And I think it's also worth pointing out that from the start of last year through the most recent data from the Federal Reserve, we saw that the top 20% of households saw an increase of about $1.5 trillion in their cash. The rest of the economy, the other 80%, saw an increase of only 0.7 trillion, so less than half. And we already know that the people at the top tend to spend much less of new income. It's the folks closer toward the middle and the bottom that tend to spend more. That tells us that all this excess cash people are talking about is largely very likely to stay exactly where it is.
Barry, does that resonate with you?
It does, but here's how I would think about what's going on in Bitcoin and crypto more generally. If you go back to the beginning of January 5th, which ushered in the blue wave down in Georgia, you saw a serious steepening of the 2s, 30s real rate curve. And the reason that's so important is the 30-year part of the curve dominated the move higher. The Fed is operating, their average purchase is 6 years. This is the first time in nearly 4 decades in the market where I saw the markets reprice heavy treasury supply. So through that whole process where the market was coming to grips with the fact that the government had borrowed $5.3 billion and was going to spend it, that curve was moving going much steeper, and Bitcoin was rallying very strongly through that whole period. This is the digital gold concept, right? I've drawn analogs back to the 1960s. It stalled out and was in a range until the Coinbase hype last week, pushed it through the range, but it wasn't destined to go higher because this whole 230s curve has completely stalled out. We had the curious treasury market rally last week when we got super strong data, because it's never been about data, right? It's been about government deficit finance spending. So I wasn't shocked to see it run into, a problem over the course of the weekend. There's a whole, China controls the technology story that guys like Peter Thiel have talked about a little bit. But it really is not, I don't see it breaking out to another new level as the digital gold concept until the Biden administration regains their momentum on spending. They've definitely had a lot of pushback on the jobs plan. Think tanks, tax policy think tanks all pushed back and said it's going to raise less revenues, impair growth by crowding out private sector investment. So for me, that's the real thing that'll get crypto going again, is this, profligate government spending.
So Barry, to make it really simple and shorter for you, sir, you think we've seen peak fiscal?
Yeah, I don't think so. I mean, I think that they will be successful in spending at least, $2 to $3 trillion more. That'll come later in the year. And when that happens, these concerns will come back. And then you'll see that, like I said, that real rate curve will start to steepen out. We could have high velocity moves higher in treasury yields. And, the digital gold piece will get going again.
Are you looking to position ahead of that?
Well, I'm in all the reflation trades. I mean, you're
staying with it, Barry.
This is my idea: is you stay with the reflation trades. Your market weight on tech, your overweight materials, energy, industrials, and all the little peripheral reflation trades as well. So,
Jared, your view
on trades or on crypto?
On those trades.
On trades, I think that you've got to be looking at some unexpected winners from infrastructure. It's not materials, it's not defense from R&D. It's not any of the big headline names that people were talking about 3 or 6 months ago. There's a lot of unusual winners. Things, like actually tech is going to be a big winner, especially hardware. Industrial automation, not old school industrial, but the kind of new productivity enhancements. Real estate, industrial real estate, and REITs have vacancy rates near record lows. We do have a CapEx build out. I think you're going to see real estate be a big winner, even healthcare services, things that people weren't thinking about, because basically the Biden plan hasn't been constructed in any of the ways that people were thinking about.
All right, so this is what is happening. It's, as I call it, the Joe Biden effect. Now, yeah, everyone spending their stimulus checks in cryptocurrency, right? We invested tons and tons, hundreds and thousands of people are investing in cryptocurrency, and guys, they're making money. And yeah, everyone is making money on this bull ride, and the government is not happy because people who are making money, of course, they're just saving all this cash, a little over $1 trillion, and the government wants them to spend it, and they're not spending on real assets. And that really is what is causing this crypto crash, because the government is planning on taxing them. Right here, if you look at the page here, Biden eyeing tax rate as high as 43.4% in the next economic package, because really to stimulate the economy, especially in the United States, the idea was that the stimulus checks were given so that people could spend in real assets, or like real estate, go out there, stimulate the economy. But guess what? People just found crypto and they are investing in crypto and they're making millions. Well, geez, you got to be kidding me. Come on. Give people a break. No, I'm just kidding. But that's really what is happening within the Biden administration, because they want to have people spend in the real economy. So is cryptocurrency, of course, is a virtual currency, and people are spending and people are investing and people are either holding or day trading or whatever it is. So massive amount of people have invested in cryptocurrency. And that's why when I look at the cryptocurrency markets, whether it's Bitcoin, it's down, it's almost at 49,000, Ethereum down to 22, Binance Coin 492. And by the way, these are all like high movers and market shakers. Like Bitcoin was 64,000, it's still going down. And that is really what we're looking at in terms of the entire crypto market, like Cardano. Even Dogecoin, our Doge baby, is down to 20 cents. It was all the way at 45 cents, right? But that is the reason why the United States government, for example, here in the US, they're trying to either come up with a tax so they can tax the crypto investors more because they're making tons and tons of money. And that's the deal, guys. That's what is happening. That's the number one reason, apart from additional reasons. For example, why is the crypto down today? There are top three reasons. This is because of the China, of course, the scheduled blackouts for safety inspection in one of the Chinese provinces also led to a significant drop in the Bitcoin's network's hash rate over the weekend. So that it could be one of the reasons it has its impact moving forward. And of course, the Indian ban on the cryptocurrencies and the US Treasury charging financial institutions with money laundering for blockchain transactions. I've covered this in the last few days, but these are one of the top reasons, right? But I still feel, in my humble opinion, the primary reason, of course, is the Joe Biden effect. And that is why we see all of this happening, where in the entire crypto market is just kind of going down. It's not a correction. It's just that, the data, the information, the market condition, the announcement, or the fear rather of the government cracking down on crypto gains, either taxing out more or wanting people not to take their stimulus check and invest. Because as you heard, that the Bank of America credit card data shows that people are taking the stimulus check, the data, the credit card transactions are going all in cryptos, guys, all in cryptos. The crypto market it grew from 600 billion in February. I've covered this earlier. I have covered this. And of course, it grew from 600 billion to over 2 trillion, and it's just massively, massively grown. Well, give us a break, guys, right? And this is the way governments crack down. And this is the way governments kind of, step up and say, hey, you guys, yeah, we don't like you making money, right? We don't like you making money. We don't like you getting millionaires. Give us all your money, right? Yeah, unfortunately, that's my take. And that's how it is, because otherwise, yeah, it's nonstop. Crypto adoption is just inevitable, and this is how it is. Now, what is Joe Biden, the entire government is going to do, or maybe other governments across the world? What are they going to do? They're going to come up with their own digital dollars. They're going to get rid of all these cryptos that we love, and they will force, their digital currencies onto the people. I don't know, but this is yeah, that's how it is, guys. What can we say? What can we do? We have to wait till the actual outcomes of what is happening. But hopefully there definitely will be a resolution to all of this, because the entire crypto is a huge market. There are many large stakeholders already involved in the crypto market. So I'm not too concerned about what is happening. These are one of those phases that just come in and pass by. So as far as I'm concerned, yeah, I don't know, but this is definitely the Joe Biden effect. This is what is happening, and that is why all these markets are, the entire crypto market are down. All of these, right? So whether it's SafeMoon, whether it's Dogecoin, whether it's Ethereum, Litecoin, any of these, you just scroll down the list, and just only a few that you'll see, but typically all crypto markets are down. And the reason, you just heard it, you just saw it, is because of the Joe Biden effect, and of course other factors as well. So let's take a look at SafeMoon and the impact of all of this Joe Biden effect on SafeMoon specifically. We saw the impact on Dogecoin. I'm going to show Dogecoin a little later, but here's our SafeMoon, and of course these are the two cryptos right here on the InvestDesk portfolio. So SafeMoon is at 3.4, and of course there are over 1 million holders, 1.2 if you look at the token tracker, and of course a little over 2 billion in market cap. I did cover the market cap video in the last stream, so go check it out. Dogecoin, of course, is a mid-market company, And here's the chart for SafeMoon, and seems like it's just kind of moving up at about 3.4 despite all of the crypto market down. So it is holding, in my opinion, not bad. It is showing some really strong resistance at this current price, which is 3.4, and of course it will continue to do so if it continues to hold at this price, which is fairly strong, because Bitcoin is even down. All these cryptos are down, but SafeMoon is holding pretty nicely. If I were to go back to Dogecoin, because that's the other crypto, and let's open up the Dogecoin here, and you will see that the Dogecoin is at 21 cents, about the same. It is now resisting at about 20 cents. So both SafeMoon and Dogecoin, hopefully this is the resistance level after all of the cryptos effect, after all the Joe Biden's effect, after all the other news that I covered, like the Chinese mining Bitcoin, right? Yeah, right here was the news. So the Sunday's drop in network power saw the hash rate, of course, go down for Bitcoin, and that's what was causing this. And of course, Coinbase initial public offering we saw last week, a number of cryptocurrencies, of course, that went all the way high, including Bitcoin, which climbed over $64,000. But other cryptos like Ethereum, Ripple, they're all going down. Of course, the entire market is down. But really, the concern is, of course, the blackout in China that I talked about, one of the other reasons. But in my opinion, it's just the Biden's effect, especially if you're in the US. And of course, the taxes, because they want to be able to get more money in terms of taxes from all these people who have made tons and tons of money. And, that is what is happening. But SafeMoon is doing all right because it's still holding at 3.4. It's just, that's the way we will ride this wave, guys. This is obviously, dust will settle and some outcome, hopefully positive outcome, especially from the government, because the government is already regulating all these exchanges. Like eToro, for example, is public, it's being regulated. The Coinbase, of course, is a large example. It's a huge example of the IPO. So we'll see how it goes. But hey, this is InvestDesk, your #1 channel for cryptocurrency investing, daily news, updates, and forecasts. My name is Syed, and make sure you like, comment, and subscribe. And with this, I will see you in the next video.